Good afternoon, you filthy apes. Welcome to AMC and ADD, where we buy, we hold, and we screw the hedgies. Screw them. Good afternoon, guys. So I had a question that's been brought up. What if I can't sell during the aftermarket hours or the pre-market hours? And it's something that I wanted to kind of investigate a little bit for those of you who are not going to have that ability to be able to sell during those periods of time. Some of those of you who are in that situation may be in Europe or outside the US. And so I kind of wanted to come up with a little bit of a presentation for you guys as an alternative to synthetic price failure and volume. Turns out, after kind of researching everything, I think that you might actually still be okay looking at those kind of indicators, synthetic price volume or synthetic price failures and volume, and still turn out okay. So I'm gonna try to make this presentation pretty short for you, just to kind of show you what it is that I'm seeing. But what you're looking at right now is GME's squeeze on roughly around 128 of last year. And one of the very first things that I start looking for is day over day volume falling. So let's just go ahead and identify that here, and that would be the 27th on GME. Now, a lot of people ask the question. They say, wait a minute, how do you know the day over day volume is going to be decreasing? Well, I look at pre-market data, and I kind of look at that for AMC on a daily basis, and I get a good idea as to where the total market volume is going to be for the day based off pre-market values. Is that always 100% accurate? Nope, it's not. In fact, I'm going to show you how it's not. But it's also very good information to kind of keep you in the play for that period of time. And if it's wrong, it's okay because you're still in the play. So we went ahead and identified just right now that we know the 27th for GME was the low volume day where we had definitely decreased low volume. I can't remember if it was the 27th or the 28th they took the buy button away, but it might have been that day, the 27th, that they took it away. And you can see the volume almost cut in half between the 2 days. It went from 178 million in volume on the 26th to 93 million in volume. So let's look at the pre-market data and see what that kind of looks like in contrast. So I'm going to take you, this is on the daily candlesticks, by the way. I'm going to take you down to the 15-minute interval. And we're going to kind of look at everything from pre-market. I have a little indicator down here that shows me the pre-market volume day over day. And what you see is that on the 27th, the pre-market volume was actually bigger, or there was more pre-market volume than the 26th, which could have meant that there might have been some more volume that could have happened on that day, but maybe there was a reason why that volume didn't show up. So if you were looking at pre-market volume, you would probably say for the day, I'm not going to sell the day because my pre-market volume is indicating that it's going to be larger than the day before in volume, even though volume did decrease by quite a lot, which tells you that when the day ends, as you're getting closer and closer to the end of the day, that, volume didn't turn out like I thought it was going to be, and therefore my volume has signaled it's time to start looking for dip size over dip size decreases. So I've gone ahead and I marked out all the increases and decreases in here. And what you'll see is we got a 33% decrease at 26. So it was decreasing day over day already on the day. Volume actually did go down. The white line that I've got in here is actually 25% down from the top. So anything above the white line means that you've sold. If you can get above the white line, you've sold to within 25% of the very top. And to me, I think that's a very good goal to kind of have. Like if that's going to be your area where you're going to do like a shotgun approach of doing all your selling, if you can get above 25%, that's perfect. That's ideal. So anything above that's going to be a good sale. Well, the 27th over here ends up being really crappy volume. So now you're starting to look for times to get out and you're looking for dip sizes over dip sizes reducing, but it doesn't. Dip size over dip size starts decreasing or increasing as the aftermarket hours continues on. And we ended up hitting our high in the pre-market period of time for the 28th. Price falls down about 49% in that pre-market trading period, and then trades back up again and gets above the white line. To be honest with you, when I saw that when the day had ended and I saw volume and dip size over dip size decreasing had flagged both of my indicators, I would have been looking for an exit point at that point, and I would have said, okay, the top is coming up here. It's either coming up or it's already happened, one of the two. And look how well this line is respected. There's multiple times in here where this line is touching, and you'll actually see over here it's even touching some more spots. I'd be looking for a time to get out pretty much after this, after I saw both those two indicators happening on the 27th. And so pre-market goes down and starts to rise back up after having hit a high of in the pre-market when nobody could have been selling. Um, I think this would be it right here. I'd be looking at this as my point, and I'd have this white line set up on here, and I'd be like, okay, as soon as we get to $381, I'm going to start my shotgun approach, and I'm going to start selling and then price starts dropping back down. So it looks like you have about 30 minutes worth of time because I am on a 15-minute interval. You have about 30 minutes worth of time in here where you can get out. Does that mean it's your last opportunity? No. There's actually one more opportunity, even maybe a second opportunity to get out to within that 25% range. Never quite works out again for them after that. Now, the next stock that I want to take a look at here, because this is GME, the next stock I want to take a look at is Tesla because I get asked this question a lot. Like, well, how would you do Tesla? Because Tesla seems a little bit different. And I would agree, Tesla does look a little bit different. Let's take a look at it real quick. I just want to, particularly for Tesla, um, let's go to the daily. I just want to show you how specifically how slow this has played out over time. In my opinion, just looking at this volume down here at the bottom, this is probably this point right here would really be your squeeze exit period right here, right? And if you decide to get back in later, as you saw price going on, you can see that since we're on the daily, you'd have plenty of an opportunity to do that. But volume is highest in this period of time and is probably giving you the signals that you want to see for an exit strategy back here, way back here. You'd be looking at maybe making an exit strategy somewhere around here. But what I really want to primarily focus on is specifically the fact that I drew in the white line in here on Tesla, and that's the 25% from the top. And I just want you to see how many times or how many opportunities there are throughout days of selling, because I am telling you this. The whole reason of doing this video is saying, like, are there going to be periods of time during the day where you can get out during normal trading hours? And I just would say that yes, absolutely. If you look at Tesla, there's plenty of opportunities to sell on the top side of the white line above 25% or to within 25% of the very top. And you have plenty of opportunities on this. Tesla has these, again, these are day candlesticks in here. There's lots of time in here where everything's above 25%. Um, the swings on these, the day over day volume on this stuff is so crazy. It's hard to look at this and know exactly like where you would, because it's so slow running. But the dip sizes, you have 21%, 26, 29, and then you have your day over day synthetic price failures falling, meaning the amount of price dip that you had wasn't as much. It went from 29.51 to 20.01. Um, and then you had a little bit of volume falling right there, right? So this would kind of be that indicator where I'd be like, okay, now might be a time to start looking for an exit. We may have had a high. I would draw my white line knowing that I was probably below the white line, and I'd be waiting for that opportunity for price to rise up above that line and start selling during that period of time to get to within 25% of the top. So this would probably be my exit point in here. The last one I'm going to look at is AMC. And we're going to go back to June. Oops. I already have it pulled up. I forgot about that. All right, so let's again identify day over day volume decreasing. Where does that really happen? Well, we got a little bit of a decrease here, but price is still running during that period of time. The big decrease really happens here on the 3rd. The 3rd was kind of the day where you have volume falling the most from a day over day perspective. And then you even have like volume the next day falling even more. But if we zoom in on this on a 15-minute interval, let's take a look at what that pre-market data looks like. So here you can see that the volume is falling every day in the pre-market a little bit more and a little bit more. It starts to increase here on the third. So this is kind of a weird one, right? So you have a signal where volume is falling in the pre-market, but you end up actually having volume increasing day over day, right? If we go back out to we know that the day that signaled was actually the third. And so this pre-market volume would have told you, well, it's possible you're going to have lower volume, and it didn't. It was higher. You had less pre-market volume this time, and it was actually higher. And then you had more pre-market volume and a little bit lower volume. So the volume triggered by the end of the day on the third. So if you come back up here again, the white line's drawn in at the 25% mark from the top. You'll see your dip sizes in here. You've got a 20.81 on the second, down to a 49% dip, up to a 33% dip. So now you have your day over day or synthetic price failure over synthetic price failure dipping, right? So, and it's all on the third. It's the same exact day again. So volume is dipping on the third, and your synthetic price failure is dipping on the third. That might be your opportunity where you're kind of going like, okay, I'm looking for an exit point now because I've had both those two things flag on the same day. Where can I get out now that's above the white line? You say, okay, I'm going to draw a white line now because both my indicators have flagged and my top was over here, so I've got a white line in, and so now you start looking for your exit strategy. And this is what I want to just point out to you guys who are unable to trade during pre-market and aftermarket hours. These periods that are above the white line, they're all during normal trading market hours. The biggest amount of time where the swing is happening in the aftermarket and pre-market periods, but the actual portion of pricing above the white line is in during normal market hours of trading. I still think, and I want to maintain that I think it's extremely crucial that you guys should have pre-market and aftermarket hour ability if you can possibly get it. Now, for those of you who are trading in Europe, all I'm going to say is you there are other brokers that you can transfer to that I think that have that possibility. I'm not going to tell you who. You need to do that research. If I just go out there and start naming off names of different brokers and you switch to that broker and you end up getting screwed, I'm gonna I'm gonna feel bad. Do your homework, go and find out. But I'm sitting here doing this video for you so that you can see that there are definitely periods of time where you're going to be able to get out on the backside of the squeeze with price getting to within 25% of the top. And I think that's very, very healthy. Super healthy, because then you know you've held on the longest you could possibly hold on for everybody's own benefit and for your own benefit to get to knowing that you've reached the top and that you've gotten past it and you're like, okay, now I can get out of this thing. So hopefully this helps you. But as usual, spend time with your family, spend time with your friends, spend time with your pets. Don't have a good weekend. Have a great rest of the weekend.